Hi all, I'm just going to give you a few seconds to enter the room and look, we'll get this webinar underway. Good to see some familiar names, fantastic. All right, let's go. Let's get this started. So look, welcome to today's or this evening's session on fundamental analysis. As I said, it's fantastic to see some. I'm just going to double check I'm sharing the right screen. There we go. Yep. Okay. So look, as I said, it's fantastic to see some regular names here. It's great to have you back with us, and also a warm welcome to any newer attendees. As a way of an intro, for those of you who don't know me, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. I've been involved in the financial markets for more than 12 years now, and I'm mostly a technical-based trader, and I emphasize the word but, I have become increasingly passionate about the fundamental side of trading over recent years, and it's something I would encourage all TAs, technical analysts, to investigate and research, even if you are a consistently profitable technician, as we all ultimately, we look to grow as traders in this never-ending learning curve of trading. So I take it I'm coming across loud and clear, and the welcome slide is visible. As usual, any issues, fire me a message, and we'll see if we can do something this end to improve the situation. As an aside, any suggestions on the webinar themes that you'd like the team to cover here, please feel free to email the research team at marketanalyst@fpmarkets.com or support team@fpmarkets.com. Finally, those interested in a recording of this webinar, FP Markets do, I believe, send out an email to attendees shortly after the presentation concludes. However, the webinar will be available in the under the FP Markets tab resources on the main webpage. You can also view these webinars on YouTube, the FP Markets YouTube channel. So look, please do go ahead and subscribe to the channel to make sure you don't miss out on any of the new content. As usual, just a quick run through this disclaimer. I won't read it all. It's basically trade responsibly. Derivative products are highly leveraged, carry a high level of risk, and are not suitable for all investors. Features of our products include fees and charges are outlined in the relevant documents available on our website. So let's get this started. Fundamental analysis defined. Just to be clear, traders, this is a presentation designed for newer traders and investors. So for those with a few years of experience, they may feel this is a little too simplistic. Now, the history of fundamental analysis began with, as far as I understand, Benjamin Graham in 1928 or 1930. And this was popularized by, of course, Warren Buffett, his mentee. Buffett actually says this about Benjamin Graham's book, The Intelligent Investor. It's by far the best book on investing ever written. I actually own this book. It's a heavy read and not one I have yet to complete. So look, the definition of fundamental analysis, or FA, is a method we, as traders and investors, can use to, measure a security's, as you can see here, a security's intrinsic value, looking at economic, social, and political factors. So when I say a security's intrinsic value, I am actually referring to equities and options here, really. Just briefly, then look, in share trading or share dealing, intrinsic value can mean the true value of a company you're analyzing. Of course, like in technical analysis, we are all different and approach the market in slightly different ways. So to assess the true value of a company, some may zero in on growth data for the company, for example. Now, in the options market, look, I won't go into too much detail here as I do not trade options, but look, the intrinsic value is the difference between the underlying asset's price and the option's strike price. Through fear of confusing newer traders, and as I said, I do not trade options, I will just leave this with you regarding options. So intrinsic value is the value any given option would have if it were exercised today, right now. So with a call option, you can find the intrinsic value by simply taking the underlying asset's price and minus this by the call's strike price. Look, with a put option, it's simply the reverse, the put strike minus the underlying assets price. Unlike equities, foreign exchange. Now, foreign exchange trading and investing is unique. Working with what's known as you can see here, currency pairs. Two currencies are paired together and quoted through a base and a quote currency. Sometimes the quote currency is termed as, let me just write this on. Let me just write this in. So sometimes the quote currency, so let's have the euro dollar as an example here, just to help us to understand for any newer traders that are present. Okay, so the euro in this case is the base currency. I'm only going to put a B there. And this is usually termed, well, I label this as the term currency, but you'll often see this as the quote currency. I won't write that, quote currency or counter currency. So there's really three terms that are used, but I tend to stick to the term currency. The reason being is €1, which is always, the basis currency is always priced as 1 unit, is worth, is priced in terms, hence the word term, in terms of US dollar. So it could be 120. Okay, so it could be $1.20 in terms. So euro dollar, €1 is worth $1.20 in terms of the US dollar, and that's all it is. So as you can see, we have two currencies in a currency pair, and yeah, so that's really it for a currency pair. But fundamental analysis studies economic developments. The economic developments of a country, events which can influence the supply and demand of the exchange rates, either positively or negatively. Now, analysts employing fundamental analysis tend to approach the markets using a macro-driven theme. That's an O. Macro-driven theme, which so macro analysts, or a top-down approach, focuses on broad economic influences. This involves a comprehensive assessment of the economy, evaluating central bank policy and aspects such as economic indicators, interest rates, growth, and inflation, of course, which is particularly pertinent right now. Microanalysis, as you can see here, is not something I will touch on this evening, but microanalysis, or a bottom-up approach, is essentially just the opposite of a macro-driven theme. All right, so, fundamental analysis is composed. It's a very basic slide, and I intentionally kept it basic. So fundamental analysis is composed, for me, it's composed of three elements. We have central bank policies, we have economic indicators, and we have geopolitical events. Now, these three components, working in harmony with one another, we should witness clear trending markets and should present opportunities to trade. So if one of these areas are in disorder, so imagine the central bank policies are in disorder and the economic indicators and geopolitical events are in line, this can cause an issue, making it more difficult to interpret a clearer fundamental picture. Now, fundamental analysis essentially informs traders and investors, of course, why the market advances and declines. And, it provides you with a trade decision to buy, to sell, or simply remain flat. Do bear in mind, guys, that when you trade, we don't just buy and sell, we can also remain flat. We can also remain sitting on our hands, and this is a position as well. It's one of the safest positions. If you're unaware, if you're unsure of what's happening in the markets, it's always best to stay out. Look, fundamental drivers effectively highlight currency direction. A country's central bank now is charged with the duty of banking regulation and implementation of monetary and fiscal policies. Now, as you can see here, well-known central banks are the US Fed, the US Federal Reserve, the European Central Bank, or ECB, the Bank of England, the BOE, and the Bank of Japan, the BOJ, and the Reserve Bank of Australia. Look, I should have really added the Reserve Bank of New Zealand as well. That's the RBNZ, but you get the point. These are the major central banks for the major economies in the world. Now, the key component is that everything begins with the central bank and how they assess economic data, how they access the economic data. So traders, we attempt to anticipate their actions through evaluating economic indicators and reacting to the outcomes from the forecast. You know, that's the actual versus variance. Now, the market projects the forecast for an economic indicator and subsequently reacts to the actual figure. We've all seen this when an event comes out, the actual figure is released, and then we assess whether that came in line with the consensus of the economists. Ultimately, high probability trading opportunities present themselves when economic data harmonizes with the central bank's sentiment. And this, coupled with a technical approach, provides traders with an overall trading picture to work with. So major central banks meet every 4 to 6 weeks. Now the Fed, this is the top one here, the Fed, the United States Federal Reserve, the Fed and the BOE, the Bank of England, are scheduled to meet every 6 weeks. Now that's 8 times a year, with the Reserve Bank of Australia here meeting 11 times each year. Now, trends or market direction is derived, as I said, from the central banks. Therefore, it's crucial market participants recognize how these meetings operate and understand the language. So central banks organize, as far as I see things, and as far as many of the successful traders that I work with, central banks reorganize sentiment at their meetings, at each meeting. So members here discuss the overall economic conditions over the past month and assess through a number of guides whether interest rates should be changed. A country's central bank raising rates can be categorized as what's known as a hawkish bias. Now, what they're essentially doing here is talking up the prospect of increasing their benchmark interest rates. The prospect of cutting rates is also an option, of course, on the table. Not right now, of course, but the table for central banks. So, what this does, if you cut interest rates, this emphasizes what is known as a dovish bias. So, either a hawkish or a dovish tone can translate into some very, very big moves being seen in the financial markets. And that's not just the currencies, guys. That's stocks, that's bonds, that's the yields, of course, commodities. So look, if economic conditions another way we can interpret the central bank meetings is if economic conditions remain unchanged, the central bank is likely to adopt a neutral stance, so there's no bias given. Usually the central bank meeting is accompanied by what's known as a statement, and of course the interest rate decision itself. So these are crucial to understand. Now, let me just get the pen on so we know where we are. Okay, so as I said, we usually have obviously the interest rate decision. Let me write that on. I'm not going to write this fully out. Decision and the statement. Okay, I'll just leave that as statement. So these two are very, very crucial. These are critical to understand, in fact, and the statement is the primary avenue. This statement here is the primary avenue employed to communicate with investors regarding monetary policy. So, at its most basic, and I should have said this before really, but monetary policy are the actions undertaken by a central bank, such as altering the reserve requirement, the quantitative easing, and the raising or cutting of interest rates. Let me just repeat part of this because it's important. So the statement is the primary method used to communicate with investors and the outcome of the vote on interest rates alongside other policy measures. But things are changing. As of the past couple of months, things have changed in terms of forward guidance. I will touch on this shortly, but this is something to bear in mind. I'll actually talk a little bit about that now. So you may have realized that major central banks, including the ECB and the Fed, have shifted to a meeting-by-meeting approach to set borrowing costs, so to set their interest rates. So if forward guidance is, shall we say, done away with, market participants, us, will be forced to rely on a wider range of signals to get a sense of where monetary policy might be heading. So what can we expect from this? We can expect a greater focus on macroeconomic releases. The Fed, you may have heard, the Fed is also data dependent in terms of its interest rate hikes. But currently, right now, the Fed is looking at another 75 basis point hike at its September meeting. So, and you can find this out from the Fed Funds Futures or the CME Group's FedWatch tool. So what we can do, as I said, we can expect a greater focus on macroeconomic releases and forecasts, so inflation, growth, and employment and unemployment figures will still be big news for some time yet. Just bear with me, guys. I'm just going to find where I left off. So let me just remove these drawings. Just bear with me. Sorry about this. That should. I'm not sure why they are still. Just bear with me. I'm sorry about this. I'm trying to clear the drawings. There we go. All right. So this is central banks. Why are they important? We've already covered this part of this. I should have really switched the slide there. Look, continuing on from where I left off with the central banks. The central banks meeting, the statement and interest rate decision are very, very important still. You will find the central bank's forward projections within the statement. Well, you used to be able to. That's not so much the case anymore because of what I just explained. Now, in terms of sentiment, as you can see on the slide, the first 2 weeks of every month or the first 2 weeks following the central bank meeting, sentiment or direction is usually, it tends to be very clear in terms of the central bank sentiment. Okay, so the reason traders watch certain types of economic releases more closely is because of the central bank statement. The bank actually informs market participants what they're looking at going forward in their forward guidance. But look, this is really has changed things in terms of forward guidance, as I said. So I'm just really putting across how I still look at the markets, but do take into account that forward guidance has quite literally been pushed to one side for now. So this is a very difficult. It's quite difficult, I believe, for many to conduct a thorough fundamental analysis. As I said, it's mainly the main focus now is going to be on economic indicators, which I believe are up next. There we go. So economic indicators. This is where the central banks piece together economic indicator, and that's why we determine and that's where they determine the statement or rate decision. So if we see big economic economic numbers around the big key releases, that leads to the central bank into the next interest rate decision. And this is really the reason why traders observe high impacting calendar events so closely. Now, just to be clear here, I do know of traders who focus largely on technical analysis. Now, please do let me know in the chat box if you're one of these traders that just focuses purely on technical analysis and make consistent returns. But, and this goes from me, and this is a very big but, they are also aware of the general overall macro picture and are aware of the economic data due out each day that may affect trading decisions or current trades in play, of course. Now, just to reiterate, economic indicators or economic data, if you will, are the drivers behind a large part of the currency market's movement. And this is where the central banks also, well, they're clearly looking at data, with the Fed being data dependent now, very, very focused on economic indicators. Okay, we have one, Lazarus. I'm sorry if I mispronounced your name, but Lazarus says, I think the attendee said that they rely solely on technical analysis. Look, I do know technical analysts that do profit in the markets consistently, and they do not conduct any form of fundamental analysis. That's fine. I know it's possible. It's just I also know other traders that do incorporate, as I said, minimal fundamental analysis and still make money. And I know those that incorporate a 50-50, so they split between the two. Let me just go over what I mean by this. So what I mean is, so imagine we trade support and resistance, just support and resistance, and we know that the NFP, the non-farm payrolls, the US unemployment, the US employment situation report is due. Now, would you take a trade? This is a question for you guys. Would you take a trade at support? Now, technically, this is a high probability support. Would you take a trade knowing that that release is due in the, say, the next hour? Would you take a trade? So Lazarus says yes. Okay, for me personally, I would not. Because if I do not follow fundamental analysis and I do not have a view on that US employment situation report, I would not be willing to risk a trade on that support, because as I'm sure we've all seen here, yeah, with low risk. Okay, Lazarus, okay, that's fair enough. Look, that's the great thing about trading, right? We all trade differently, and as long as it works, as long as you make money, that's the main thing. But yeah, for me, I would probably sidestep trading support or resistance ahead of major news. But I do know traders that don't. I do know traders that do take trades ahead of major news at technical levels. So it's, but I was trying to get across how some traders do view the markets. So, as John Jambo, I do see your question. I will get to that very shortly. Just bear with me. I just want to cover these economic indicators. Oh, whoops, I didn't mean to do that. Sorry. Okay. As most traders here likely use the Forex Factories calendar, I have used this as an example. Bear with me. So most traders will focus on high impacting releases, as I said, which on Forex Factory, as you can see, are marked in red. You also have the yellow, which are low impacting events, possibly low impacting events, I should say. And then you have the orange. Let me just pen. So we have the red. This is the high impacting event. So the BOC Monetary Policy Report, Bank of Canada. And then we have the orange, which are potentially medium impacting events. And then we have the yellow marked events, which are potentially low impacting events. Now, generally, we do not see much of a reaction from these events here. We can see pretty hefty moves from the medium impacting, and we can also see some very large moves from the high impacting events. Now, I'm not going to go over all of this calendar, all of the calendar's functions. I have done a video on this, so please do be sure to check that out. It will be located in the archives on how to read an economic calendar. So please do check that out if you're interested. We also have, but I will go over the basics here. We also have the prior. Bear with me. I'm just going to move this. We also have the previous or prior, forecast, and actual. So the previous events will be in this column here. As you can see here, this is what happened previously in the events here. Here are the forecasts. As you can see here, previous, and there's the forecasts here. Okay, this is what the economists, the surveyed economists, believe the event will likely be. And here's the actual event. And this is where you'll see the actual numbers at this point here. So once an event comes up, once the time hits, that's the time here. And do bear in mind, you can set these to your time zone, guys. This is set to the UK, British Standard Time, or British Standard Time. And yes, so once these events come on, you'll see a number emerge from these points here. And it will either be in line with consensus or above consensus or below consensus. And yeah, so this is something to certainly look out for. Let me just remove some of these draw. Okay, I really want to move these parts there. Okay. So new traders might also want to note what Q/Q and Y/Y. So let me write that on here. So we have Y over Y, we have Q over Q, and we also have some really funky ones, which I'll get to in a minute. So as we can see with the, let me just try and find some. We don't see, there isn't, I thought there was one on here. Oh, here we go, sorry, whoops. We do have a, raise that, I'm sorry. There we go. All right, okay, so we do have, so the year on year, what does this mean? Up here, we have the year over year, this one here. All this means is, this is the New Zealand. As you can see, the countries are labeled here. The New Zealand, this one's the New Zealand dollar, the Swiss franc, euro, and so on. I'm not going to go over all of these because it's pretty self-explanatory. But anyway, we have the New Zealand dollar here, low impacting events, and credit card spending year over year. All this means is with the corresponding, all this means is this value is the actual value is compared with the corresponding data a year earlier. Now the monthly year-on-year numbers, as you can see here, as we can see December, November, December, August, September, October, November, December. These are all monthly year-on-year figures. If that makes sense. So, as I said, all this means is they're comparing the monthly figures compared with a year earlier. So yes, that's really all I have to say on that. Q/Q, so quarterly over quarterly. We do have something here. Here we go. New Zealand. Now, again, this is a high impacting event, guys. New Zealand CPI, inflation numbers, quarterly over quarterly data. So inflation data, this is. This is a measure of the number one quarter to the next. Month over month data. So we have M over M, which you can see, I believe. Do we have any month over month data? There we go. Month over month premium wholesale inventories for the US dollar, month over month. Month over month is a measure of the number 1 month to the next. So it's comparing the previous month's data to the next month's data and so on. You'll also find some data that gets a bit funky with the Q/Y, which is simply data that represents the quarterly value compared with the same quarter a year earlier. Okay, nothing special, but it's the, let me repeat that. So it's the quarterly value compared with the quarterly value a year earlier. That's all it is. You will find these a lot with the data out of China on the calendar, such as GDP. So do be on the lookout for those. Finally, what does seasonally adjusted? I've been asked this a number of times. I'm not going to write this on there because it's a little bit difficult with a mouse. But seasonally adjusted, all this means is it's a statistical technique that attempts to measure and remove the influences of predictable seasonal patterns to reveal how employment and unemployment change from month to month. All right, so economic indicators, as their name implies, are simply statistics, often on a macroeconomic scale, designed to measure, you probably guessed it, economic activity. Traders and investors use these indicators to analyze the well-being of a country's economy. So government organizations and private groups release several economic reports on a weekly, a monthly, and a quarterly basis, each measuring activity in a particular segment of the economy. Widely followed indicators are employment data, inflation data. Now, inflation data certainly needs no introduction right now. Currently in the UK, we are sitting on an eye-popping inflation annual inflation rate of 9.4%. In the US, I think it's around 8.7. I think now. I know it looks like it's topped in the US, but in the UK, we are looking like we are going to have higher inflation, even more so. I think the release is on Wednesday or Thursday this week. So it's certainly something to watch out for. We also have growth data, so think of GDP, gross domestic product, and then we have retail sales. And look, we can also have things like the stock market, industrial production, and housing figures. Now, the stock market, as you may or may not know, is a forward-looking indicator. So it tends to trade ahead of the economy, if that makes sense. So you'll often see the stock market decline ahead of an economic downturn. I think it's 6 months to a year. So it's quite a long-term indicator, but it's certainly something to be aware of. In terms of release schedules, approximately 5 key economic indicators are released each week. Some, of course, there could be some more weeks. Now, I really do believe it's important to understand that no single indicator. It's very much like us technicians, right? It's very much like we cannot just rely on the RSI, the Relative Strength Index, to govern our trading decisions. It's the same thing with fundamental analysis. We cannot rely on one single indicator to provide us with a clear picture of the economy's health. At best, each indicator provides, it will provide, a snapshot of current conditions. But when piecing together the economic indicators, you should get a clearer picture of how the economy is faring. However, it is crucial to understand that some economic indicators are more important than others at certain points in time. Look, I will say it again, inflation, as of this presentation, is incredibly important. That's really all I have to say in terms of economic indicators. So, for the convenience of analysis, geopolitical events are simply, don't really have this. There shouldn't be, so bear with me. Geopolitics, there we go. So, for the convenience of analysis, as I just said, geopolitical events are simply divided into wars and conflicts, terrorist attacks, and, international tensions. US-China tensions, Russia-Ukraine tensions, trade tensions, Brexit, the UK exits, the exit from the EU, just a handful of prime examples. Now, geopolitical tensions can really have an effect on both the fundamental side of things as well as the technical side of things. I'm sure for any technician that's been in the market for a while now will remember Donald Trump, the former president of the US, tweeting something and completely ruining a perfect setup. So that's an example of geopolitical tensions, as it was usually about another country and things. Yes, so certainly something to be aware of. The announcements surrounding geopolitical issues are usually not scheduled, unlike the central bank announcements and the various economic data. So they're very, very, very difficult to plan for. This can really cause havoc, as I said, in the currency markets, and can be very, very difficult to trade. There's almost no start or end to these geopolitical events. All right, so we did have a couple of questions. John, can you explain hawkish, dovish, and neutral? So a hawkish tone is I'm just trying to think of an easier way I can explain this. So hawkish is so I'm trying to think, as I said, the best way I can really explain this. So a hawkish tone or a hawkish bias is what they're essentially doing. The central bank, when you have a hawkish tone, is they're talking up, talking up, as I said, the prospect of raising rates. So we've been very hawkish with the Fed recently, right? The US Federal Reserve, they've been talking up the prospect of raising rates. Fed speakers have come out and said we're potentially raising rates further. And yes, so that's a hawkish bias. All right, so the prospect of cutting rates is termed as dovish. Now, I cannot remember why it's called hawkish or why it's called dovish. I do believe it's there is an explanation on Google somewhere, but I cannot remember why it's called that. I've just grown to accept it as such. When you hear hawkish, you generally think of increasing interest rates, and when you think of dovish, you generally tend to swing to cutting rates, so potentially bearish. So think of this: hawkish, bullish, dovish, potentially bearish. And neutral. Neutral is pretty much as it says. It's a neutral stance. So there's no bias given by the central bank. Is there any way, I'm just reading the questions, is there any way to sieve out market noise with respect to news as to have a credible bias? I think the idea is to start with the central banks, what they're looking at. And so we all know all central banks are looking at inflation right now. So we know inflation is a key driver of the market right now. We also know unemployment will be a key economic indicator. Growth data will be a key economic indicator. So is there any way we can sieve out market noise? That's the only way I know, is to really dig down deep and find out what the majority of the market is watching, in particular the big banks, the big commercial banks, as well as obviously the central bank. That's the only way I know to attain a credible bias. Right, so I'm just reading the question, sorry. We have another question here. What can you say about news events that don't have any actual previous or forecast? How can you trade such events? I'm sorry, I'm not sure what you mean. If you're talking about economic indicators, there's always a previous or something like that. There's always very often an economic projection, a projection. You have to clarify that for me, what you mean, John, because you said don't have any actual previous or forecast. Well, you wouldn't be able to trade that event, I don't think. It'd be very, very difficult. It's almost impossible, in my opinion. All right, John, do try and clarify what you meant, and I'll try and I'll cover that. All right, so look, guys, we are rounding up to the end here. That wasn't a chance to ask questions. I still take questions now. I just want to get the last bits underway, out of the way. So, look, we do have our next event for the webinars is supply and demand and essential guide. So this is more back to the technical side of things. Now, I do encourage everybody to try and come along to this. It's the same time, guys, and and it's certainly something to be aware of. What we'll be looking at is an introduction to supply and demand, what is liquidity, and all that good stuff. As always, if there are any specific topics you would like the team here to talk about, please be sure to send in your suggestions to either the support team at fpmarkets.com or marketanalyst@fpmarkets.com. Also, guys, please do check out we now have our own FP Markets Academy, which we're continually working on. There's a number of good videos on there, a number of articles as well. Do check that out. There will be a link in the chat box. Also, do make sure to register for the FP Markets Telegram channel to get instant updates. The sign up tab can be found at the lower side of the lower left part of the FP Markets website. Now, just to add to this, we're also operating a newsroom now. Hopefully you'll see a link in the chat box with that. So we have a newsroom for our Telegram channel, and we also operate a newsroom with Twitter. So do try and come along, subscribe and keep updated. Right, I do see some more questions, I think. I'm just reading the questions, guys. Sorry, just bear with me. So we do have a question. Since the economists reach a forecast on fundamental data, is inciting trading possible in Forex? I do not believe it is. It's very, very unlikely to be insider trading. I'm sure it has gone on in the past, but to move such a gigantic market, a mammoth market, would take a lot of money. And yeah, but do I think it goes on now? I cannot tell you for sure it doesn't go on, but I believe it would be a very huge task to trade on insider trading in the FX market. Now, I know what you mean. There was a question, just bear with me. Oh, John, you're talking. So what you mean? I see your example here. So what you've done is you've pulled up the monetary policy meetings for the RBA. I think, right? That was today, I believe. So that's from the central bank. Of course, there will not be no actual. Let me just pull up the. I don't believe I have the calendar up, but there will be a previous with that, surely, on the calendar. I'm just trying to find the event. Just bear with me. Oh, whoopsie, I didn't mean to do that. Just bear with me. Just trying to find the calendar for you, John. Just bear with me. So you're talking about, was it today or? Yeah. Oh, it's today. It was today. So you're talking about the RBA. Yes, I see what you're saying now. These are the actual central bank announcements. So what you've given me there as an example, if you go to their website, you can find that on the latest release. You'll see the previous. Oh no, this is the meeting minutes. This has no actual. Sorry, I'm reading this wrong. This has no actual previous or forecast measurement because it's not an event really. It's just a document. If you read what it says, why traders care, it's a detailed record of the RBA, Reserve Bank Board's most recent meeting, providing in-depth insights into the economic conditions that influence their decision. So it influenced their decision on the previous RBA interest rate hike, which I believe they hiked rates by 50 basis points. So that we know you can't really, what you'd have to do is get when the release is, when it's released, when the minutes are released, you'd have to read through the document or sign up to a service that reads through the document for you. And you can trade on what's said in the document. So there's going to be no previous or forecast or actual event values for this. And you'll also see just above there, John, you'll have the FOMC meeting member, Wallace, speaking. There'll be no forecasts or actual events because it's someone speaking. All right, so I hope that answers your question. Lazarus, you've said something about risk management. I'm not sure what you mean. And then you've typed 200 to 1,000. Again, I'm not sure what you mean, unless you're talking about where you trade technically, but you trade into events. and you keep the risk management low. That could be it. Yes, so look, I hope that helps, guys. Right, so if there are no other questions, I'm just going to make sure. If there are no other questions, look, comments and feedback, as I said, support team at fpmarkets.com or marketanalyst@fpmarkets.com. We can use any, you can use any of those emails. On that note, guys, thank you very much for taking the time to be with us. It's we highly appreciate your time, as I said, and have a lovely evening or day wherever you're based in the world. And I'll catch you all at the next event. Thank you so much. Goodbye.